Tough love and finance, tough love and finance. I came from nothing, taught myself financial literacy. I'm gonna bring you to you knowledge that I gave you seek. I'm gonna teach you some financial mixed with literacy. Tough love and finance, tough love and finance. Make sure you like and go subscribe to my channel so you can stay up on that game.
Welcome back, you guys. It's your girl Energy from Tough Love and Finance. For those of you who are new to my channel, I am not a financial expert nor am I a financial advisor. Alrighty, as promised, we're going to get into stock terminology part 2. Now, I'm going to put up a graph on the screen. This is from my Apple Watch, but you could go ahead and do that in any stock brokerage or any way that you follow your stock. I'm going to show you what it is by circling it and adding a definition of what that means so you get familiar with the terms when looking at these graphs, all right? So let's go ahead and get started. We're going to do 52-week high. That's where we're going to get started with, all right? Enjoy. The highest closing price of a given stock within the past 52 weeks, that's a year, within the year. And then you'll see the opposite 52-week low, and that is the same thing, the highest price given in the stock within the 52-week. But in this case, it would be low. So it would be the lowest price within the year. So that's what the 52-week high, 52-week low, it just refers to the price within the year, whether it's low or high. All right, bullish, the bullish reversal versus the bearish reversal. Now, when you hear about the bull on the stock market, bullish, that means the stock market is going up. Green, bullish. It implies the institutional accumulation and the potential for a higher prices. Okay, so that's what it is. For example, if I say I'm very bullish on Tesla, that means I feel like that stock's going to go up. So definitely acquire more, you know. If I'm bearish on Exxon, the oil companies, that means I feel like their prices are going down. The stocks are going down. So, you know, you have the bulls and you have the bears in the stock market. And it is really up to you whether you're going to be the bull, the bear, depending on the situation, but that's what that stands for. So now you know, either bullish or bearish. That's kind of fun. The IPO is the initial public offering. So when a company decides to go public, you know, a private company decides to go public, usually the IPO is the process by which a private company could go public. And it's the initial public offering for their shares. A company does that when they're wanting to raise money. Okay, so when you have a small company and they're doing really good for themselves, but they need to expand because they have a high demand, you know, they go through this process, and once the process gets approved, they go into the initial public offering and they'll offer their shares for, let's say, $25. And then as they progress and move forward with their earning report and they're doing well, then their prices will go up. And if there's a higher demand for their stocks or their shares, they will go up. But initial public offering is the IPO. That's what the IPO stands for. EPS, when you hear EPS is the earnings per share. That's the company's profit divided by outstanding shares of its common stocks. Okay, so that's company's profit divided by outstanding shares of its common stock. And that's what the earnings per share is. Now, if the company has a negative EPS, then that means it's not doing so well. You know, if it's negative, you might want to rethink that before getting into that. Dividends is the cut of a profit company's earnings. So it's a cut of the company's earnings profit. Okay, that's what that is, determined by the company's board of directors. So the company's board of directors determines how much dividend the stock owner gets, the shareholder of that company's profits. Now, it's not a lot, but something is better than nothing. So always look into that. And when you're looking at it, and I'll have a little image up there where I'll circle the dividend yield percentage, that lets you know whether the company pays out dividends or if it doesn't. I like the Apple app on my phone, on my iPhone, that shows me those graphs and those charts that I like to read into. And then if it doesn't show, sometimes they don't show the EPS or the PE ratio, which I'll get into that in a moment, what that is, then I'll go into Yahoo Finance, or there's other websites that you could go in and find this information out. pull up their earnings report so you know how well the company's doing. Because the last thing you want to do is invest in a company that owes a lot of money and is not bringing anything in. That's how a company works, you know. Looking into their earnings report is just the transparency. As a shareholder, you want to make sure the company's doing well and doesn't have a lot of debts. And that's what we're seeing right now with this pandemic. We have a lot of companies going under. The ROI is a return on investment. Probability of a stock, also used to evaluate the result of real estate transaction. That's what that stands for, and it's pretty self-explanatory. It just allows you to calculate whether it's going to return what it is that you invested and then some, if it's a good investment or not. That's what the ROI is. Now, the market order is basically buys or sells shares at the prevailing market price until the order is filled. So you'll see the market order on your brokerage account, and that's when you're getting ready to buy or sell something and it's waiting, okay? Now, the market limit is a buy or sell at a specific price or better. The buy limit only executed at limit price or lower. And then you have the sell limit only executed at the limit price or higher. So the buy will go through if it's the price you want it or lower. And then the sell limit is going to be going through if it's what you're asking for or higher, okay? And that's how you could set the limits on your brokerage account. It'll give you that option. Price earnings ratio, share price divided by earnings per share equals the PE ratio. So the share price divided by the EPS equals PE ratio. And that's really important because, again, it tells you how the company is doing. Just from the PE ratio alone, the number of shares it has by the earnings per those shares gives you the PE ratio, and it tells you whether or not that company is doing well. It's a great indicator of how that company is doing, and I know many investors kind of just go by that instead of having to read the full reports. But I'm very thorough with my investments, so I like to read the earnings reports, which I recommend. Okay, don't go in blindly without having your facts. The bid represents the maximum price the buyer is willing to buy for a share of a stock or other security. So bid is what the buyer is willing to pay for. So like say, hey, I'll give you $10 for this phone. That's how much the buyer is willing to pay. The ask is what the seller is willing to take for the same security. So if I have a phone for $20, but you're bidding $10, I'm not going to sell it because I want $20. So I'll wait for somebody else to pay that $20. Okay, that's basically what it is. That's all I have today for the stock terminology. I hope that you guys understood these are basic to investing, and hopefully we get into more stock terminology in the next video. But at the same time, I want to kind of move a little further into some stocks that we could discuss. I know there's a lot of really interesting things happening in the stock market right now. There's people who bought into Apple and Tesla after the split and are very worried about their shares because I know today Tesla was dropping and Apple was doing okay, but also in the red zone. But I kind of want to further discuss current events and the stocks and how those current events affect the stock share price. All right, so that wraps up today's video. Make sure you like, subscribe, share with family and friends, and I'll see you in the next one. Bye.
Make sure you like and go subscribe to my channel so you can stay up on that game and all decisions you handle. Tough love and finance, tough love and finance, tough love and finance.